All right, students, let us begin now. In the previous lecture, we have completed almost the complete paper. Only some part of it is left. The paper of March April 2019, Advanced Accounting and Auditing Paper 2, Corporate Accounts. Right now, we have completed in the previous lecture till question number 3, first option. Right. So we'll be continuing with the same paper with question number 3, second option. So I hope you have the question paper. Just download it if you don't have it. Right, I did provide you the link, so you can download it. Some of you may put the link in the chat box itself. For those students who have not joined the previous lecture for this paper, can download the paper and start solving together. Okay, so let us begin. Come to the question paper. Question number 3, first option we have already done. The second option, following is a balance sheet of Junior Limited as on 31/3/18. So there is one balance sheet given to you. The name of the company is Junior Limited. Now Senior Limited decided to absorb Junior Limited on following terms. Senior Limited took over all assets except cash, bank and investment, and took creditors also. Equity shareholder of Junior Limited is to be given 5 equity share of 10 each of Senior Limited for every share they held at a market price of rupees 12. Absorption expenses occurred rupees 14,000 is to be borne by Senior Limited. Then preference shares will be given 8 equity shares of Senior Limited and rupees 12 for every share they held in Junior Limited. So this is what uh, they have given for purchase consideration. So you can easily calculate here. See, they have not used the word that for purchase consideration, these many equity shares against equity, these many equity shares against preference, and balance in cash. That word of balance is not given. So I guess full purchase consideration is through shares. So you can easily calculate purchase consideration. Then debenture holders are allotted 10% debenture in such a way that they get a premium of 20%. That is debenture interest. Okay. Then Senior Limited will consider value of 1,24,000. Sorry, debenture holders will be given 10% debenture in such a way that they get premium. So some more premium is to be given, premium on the issue of debenture. So they will get something extra than what they were having previously in Junior Limited. And then Senior Limited will consider value of stock at 1,24,000 and machinery rupees 4,20,000. Battery reserves to be kept 5% on debtors. So again, you are required to prepare realization account, equity shareholders account, preference shareholders account, and bank account as we have done previously. And you need to pass journal entries in the books of Senior Limited. Now you can see here, time and again I've told you that question number 3, they will ask you a sum of amalgamation absorption, and in that sum you will be either required to prepare accounts, you may be required to pass journal entries, and you may even be asked to prepare a balance sheet after merger purchase. So there is no point in skipping any of the things. That when you are attempting a chapter which has a weightage of over 40%, then in that case you have to ensure that you do everything. Don't just skip any of the points. That if you don't do merger purchase, you'll be fine, or you don't do journal entries accounts, you'll be fine. Don't think that way. If you are going to get a topic which has a weightage of around 40%, you cannot think of skipping anything, that you will leave that thing in option. So this sum, you can see it's the same, it's the copy of what you have done in question number 3, first option. So let us begin. Our first step is to calculate purchase consideration, right? So let us start. Question number 3, option sum. I'm doing it on Jamboard. You can do it alongside me. Question number 3, optional sum. Or you can say option. So give the heading calculation of purchase consideration. Sorry. Fine. So let us begin. Now, equity shares, current equity shares, shareholder are to be given 5 equity shares against 1 equity share. So, equity shares to existing shareholders, existing shareholders. So, you're going to give 5 against 1. So, currently you are having 12,000 shares. Just check the balance sheet. So, how many shares will be given? 60,000. 60,000 shares will be given. Now they have said these shares will be given in what manner? So, okay, so market price is given, so they'll be issued at 12 rupees, with that is 10 rupees for share and 2 rupees as premium. So this will be 6 lakh and 60,000 into rupees 2, that will be 1 lakh 20,000. So total that you will issue to equity shareholders will be 7 lakh 20,000, right? And then equity shares, equity shares to preference shareholders, equity share to preference shareholders. So here they have said you're going to issue 8 share for 1 share. So if 1 share is held by the shareholder, he or she will get 8 shares. So if total shares are 4,000, how many shares will be issued? 32,000. 8 fours are 32,000. Again at 12 rupees, so 10 rupees will be for shares, like 20,000, and 32,000 into 2. So it will be 64,000. So total preference shareholders will get shares worth 3,84,000, right? Any other thing that the purchasing company, that is Senior Limited, is paying? Any other amount in any other form? See, they have said that in the first point itself, they have said, sorry, second point, absorption expenses were 14,000 borne by Senior Limited. So this is the additional amount that they are paying. So absorption expenses, that is the cash for paying such expense, is borne by the Senior Limited, the purchasing company. So that is 14,000. So that's what you're getting, right? So do the total 11 lakh 18,000. 11 lakh 18,000 is purchase consideration. Okay. Now you have to prepare accounts, but before you prepare the accounts, you also have to pass the journal entries. So for that, you will need to calculate general reserve, sorry, capital reserve, goodwill, depending on how much net assets you are getting and how much as a company, purchasing company, you are paying. So for that, first calculate net asset as well, so you can do accounts and journal entry simultaneously later. So net assets, you're calculating net assets. So you take assets taken over, just write the assets. If any new value is given, take the new value. First is building. Building you are taking at 10 lakhs. Building at 10 lakhs. Then comes machinery. Just look at the old balance sheet, and if any adjustment is given for net assets, you can take the new value, otherwise just take the old value. Machinery for 4 lakh 20. Just check new values are also given. Stock at 1 lakh 24,000. Then comes debtors. Debtors 50,000. Okay, so that's it for assets. Total of assets will be 15 lakh 94,000. Okay, so from this you deduct the liabilities. I don't have space left here, so I'll be writing little congested. Kindly bear with it. Liabilities taken over. Liabilities. So for that, bad debt reserve, you can deduct from the debtors and then write the new values of the debtors. That will also be correct, or you can deduct it later like this. That is also correct. Creditors and then debentures. So total of this is 4 lakh 82,500. Okay, so assets you are getting is 11 lakh. Assets that you're getting is 11 lakh 11,500. 11 lakh 11,500. And purchase consideration. Purchase consideration. If the expenses are paid by junior company, then it will be written in realization account. That does not affect senior limited, but here senior limited is paying, so it will affect the purchase consideration. Extra amount is being paid by senior. If junior limited was paying the absorption expense, that is realization expense, that would have been written on the realization account. So purchase consideration was 11 lakh 18,000. So you get the difference is 6,500. So you are paying this much more, so this is goodwill. You are paying this amount extra, so this is goodwill. So that's it for the working part. Now is to prepare accounts for these types of sums, and we have prepared in this paper as well. Same accounts you need to prepare here. So what are the accounts you need to prepare? Just check again. Come to the question you have to prepare. See, you can prepare more accounts, but you have to make sure that you don't miss out on the accounts they have asked. Apart from these accounts that they have asked you to prepare, you can add accounts as per your convenience, that you feel good passing and posting the entries to different ledgers. But then you should not miss the accounts that they have mentioned you to prepare. So here they have asked you to prepare realization account, equity shareholder, preference shareholder, and bank account. These are the 4 accounts they want you to prepare. So let us begin preparing these accounts. So first, realization account. realization account, which will be the biggest of the lot because it will have more entries. Or then you can prepare um, preference share, preference shareholders account, then bank account, sorry, equity shareholders account, equity shareholder account, and then bank account. These are the accounts which you need to prepare as per their direction. Uh, these accounts are prepared in the books of Junior Limited. Right? Let us start preparing the accounts. So when you open the accounts, you need to write the balances. When you open these accounts, you need to write the balances, right? And after transferring the balances, shareholders will get whatever reserves belong to them, and transferring assets and liabilities to realization account, and go ahead with the sum as you used to do. Okay, I'll come to the doubts later. After completing this sum, I can see certain students. Uh, I can see certain students, asking their queries in the chat box. I'll come to those later. Okay, right now I'll be trying to first complete the example in the flow, and then we'll discuss over whatever doubts you have. Why we have done in a manner like this, or how we have calculated this, or why we considered this. Everything we'll discuss when I complete this. Okay, so don't worry. Okay, so let us just start solving this. So preference shareholders account, opening balance, that is transferring the capital by preference capital. Preference capital is 4 lakhs. Okay, then in equity, equity you have by equity capital 12 lakhs, by general reserve 1 lakh, and by P&L you need to just check whatever free reserves are that those belong to equity shareholder. You need to give them that when you are closing the business. And if there is any fictitious asset, that too be transferred to equity shareholders account. So you can see debenture discount 20,000, preliminary expense, preliminary expenses 80,000. These are the things then you need to transfer. Now come to realization account and transfer the original assets, the original values. You don't take new values when you prepare or transfer the assets and liabilities to realization account. So on the debit side too, building original values. No new values will be considered here because you are writing in the books of Junior Limited, closing the books at the original values. So building 10 lakh, machinery 5 lakh, original value. Just see the balance sheet and keep on writing the amounts. Goodwill, original goodwill, not the one we calculated. See, you may think that goodwill, why we didn't take in net asset. Net asset, while calculating net asset, we don't take goodwill into consideration. And then we need to find whether we are actually paying extra amount for goodwill, or we are paying less and getting a profit that will be transferred to capital reserve. That's why when we calculate net asset, we don't take the goodwill which is given. We need to find goodwill with the difference of what we are paying against buying the business. Okay, so I guess your doubt is clear here. Some of you were asking why we didn't take the goodwill, because goodwill is actually not taken when you consider net asset. Only rest of the assets are considered. Moving on, next is investments. 2 lakh. Stock. These are all original values, nothing of the adjustment being considered here. Okay, we have transferred all the assets. Now we transfer all the liabilities. Come on the credit side of realization account. Buy debentures. Debentures 3 lakh. Then comes next by creditors. Then comes by uh, that's it. Any other liability left out? No. Liabilities are only this much. So we write the next, that is purchase consideration. So by senior limited, purchase consideration. What is the amount of purchase consideration? 11 lakh 18,000. So once you write the purchase consideration, write the amount that you're getting as purchase consideration. So what you're getting equity shares. The preference shareholders are getting equity shares, as well as the equity shareholders are getting new equity shares. So two equity shares of senior limited. Senior limited 3 lakh 84,000. Okay, fine. And then equity shareholders are also getting the equity shares of senior limited. So that is the total 7 lakh. At the time of purchase consideration, we already calculated these amounts. So I'm just writing as it is. Okay. Now, just check here. The preference shareholders were having a balance of 4 lakh, and they are getting new shares worth 3 lakh 84,000 only. So they are incurring a loss. So that loss will be transferred to realization. Loss to preference shareholders is 16,000. Okay. So that is done. Transfer that loss by preference shareholders. Preference shareholders account. That is 16,000 loss which they are incurring. Okay. Now, when it comes to bank, whether they have taken bank account or not, just check it out. what they've said regarding bank, except cash. So they have not touched the cash account. So prepare as if it is something that you have. Cash, bank, and investment is what you have in your hand. So here, opening balance. So in bank, you have opening balance, cash and bank, which is not taken over by senior limited. Opening balance 50,000. They have also not taken investments. So you need to check at what price you are selling your investments. See, point number 4. Junior Limited sold investments at 164. Now these investments, value of these investment is 2 lakh, and you are selling it at just 1 lakh 64,000. So can just write here. So to investments in bank, you will get money when you sell the investments. So to investments 1 lakh 64,000. One more amount that you'll receive in bank is from senior limited, the amount that we calculated in purchase consideration for expenses. So you're receiving that from senior limited. So bank will be debited. You are going to receive money in bank. So that is 14,000. Now you can write these two amounts in realization. So this amount will be transferred to realization. So in realization by bank, sale of investment, 1,64,000. See, we have transferred the assets here first 2 lakh, and then we are selling it for 1 lakh 64. So automatically we are getting a loss of uh, 36,000. If if we don't do this way, see this point. If you want to do separately for this investment, you prepare investment account, you write the balance 2 lakh, you sell it for 164. The loss of 36 will be transferred here on the debit side. That way also can be done, or you can do it this way, that on debit side you write 2 lakh of investment and you are selling it for 164. So thereby you are getting a loss effectively 36,000 on the debit side. Both ways are correct, so don't get confused. Okay, you can do this. I, I explain you again. You prepare separate investment account, you write the opening balance. See see what you have to do is, you prepare investment account, write opening balance 2 lakh, and then sell that investment for 1 lakh 64. So obviously you are going to incur a loss. That loss will be transferred to realization. By realization, 36,000, and that you transfer on the debit side. That is one way of doing it. The second way is, first transfer full investment on the realization debit and write buy bank for whatever price you are selling. So automatically the difference of 36,000 will be recorded on the debit side of realization account. This is the other way. This is also correct. Okay. Our objective is to get 36,000 as a loss on the debit of realization. So that way you can get your answer. Is it clear? Okay. Now we have passed all the entries. I guess all the adjustments are covered and all the entries are passed. One just realization expense entry is left. By realization, the expenses you will pay, the money that you got from senior limited, you have to actually pay as expense. So that is 14,000. And to bank expenses 14,000. Okay, so that's it. Just close realization and find out whether there is a profit or loss. Just calculate it. The difference, if it comes on credit side, it's a loss. If it comes on the debit side, it's a profit. So just calculate whatever amount you get. You'll get the amount on the credit side, that is by equity shareholder. Loss will be borne by equity shareholders, and that amount is 3,46,000. 3,46,000. Total of realization will be 20,64,000. 20,64,000. Transfer this loss to equity shares. Transfer this loss to realization. Loss is 3,46,000. Okay. So now transfer the balancing figure to equity shareholders account, bank account balance. That balance will come to 2,14,000 by equity shareholders account. 2,14,000. Close the bank account. 2,28,000. To bank 2,14,000 and do the total of equity. It is 13,80,000. Okay. So this is what you have to do in the books of Junior Limited. Okay. And see, there are different ways of doing the same thing. If you're not included expenses, absorption expenses in the purchase consideration, it will not be shown anywhere in the books of Junior Limited. But if you show it in the purchase consideration, it will come here in the bank account twice. Once getting the money from Senior Limited and then paying the money actually. So effectively, it won't affect your books of accounts because see, just want to explain this purchase consideration point regarding the expenses. Just pay attention here. See, in purchase consideration, you included expense amount and you have paid here expense. Okay. Similarly, in bank, you're getting money for expense amount you're paying. So it nullifies basically. It's dual entry. So it nullifies every time you pass it. Once you pass it on the debit side, once you pass it on the credit side. So if you don't include the expenses which are borne by purchasing company, that is also correct, but it will affect that purchase consideration will decrease and you will not show on the debit side the expenses paid. Similarly, in bank, you will not receive any money and you will not pay any money. Ultimately, your answer will remain the same. So both ways are correct. If you include in the books, it will be nullified. So it's up to you whether you want to take purchase absorption expense into purchase consideration or you may not take it. As I said, university considers both correct. Okay. Yeah, that will be okay. Purchase consideration. That is also correct. If you don't include in purchase consideration, that is also fine, because you will not show it anywhere. And if you're showing it, it is shown every time on both the side, debit credit, debit credit. So it gets nullified because of the dual effect. So that's fine if you don't include in the purchase concession. What I want you to understand is university considers both solutions. So as per university, I'm putting forward my thoughts here. So you may change, you may have a different way of doing it. The answer should remain same. Ultimately, equity shareholders should get in their uh, account the amount through bank, that is 2,14,000. That is your final answer. Okay. Moving on, passing journal entries in the books of Senior Limited. Let us quickly do it. Journal entries. Journal entries in the books of Senior Senior Limited. Let us start with the journal entries. Let us start with the journal entry. First, now you should be aware of the entries. Majority times it's almost 3 to 4 entries that you need to pass. So first is business purchase, business purchase account, business purchase. You're buying it for 11,18,000 to liquidator of junior 11,18,000. Now regarding assets and liabilities, now you need to write new amounts. Building account debit 10 lakhs. Then comes machinery account. New values, in case not given, then take the old values. Stock, stock account debit 1,24,000. Debtors account 50,000. And the amount of goodwill that you found out, goodwill account 6,500. Okay. Two, bad debt reserve 2,500. Two, creditors 1,20,000. Two, debentures 10% debentures. See, the original debentures are, I guess, uh, just check old debentures. It is 3 lakhs and you need to give 20% extra as new debentures. So 10% debentures, 3 lakh 60,000, 3 lakh plus 20% of it, and two, business purchase 11 lakh 18,000. Okay. And the payment of purchase consideration, liquidator of Junior Limited to equity share capital, like 11 lakh 18,000 is the amount that you are paying in the form of equity shares worth 11 lakh 4,000, and for expenses you are paying to bank 14,000. So that's it. So this was the sum. Okay. Now just want to discuss very briefly, question number 4, short notes. So in question number 4, you need to explain different types of amalgamation. So when we did the chapter, I did explain to you the types of amalgamation absorption, capital reduction, right? We have discussed in depth. Then comes unsecured creditors. That point also we have discussed when we did liquidators accounts. I made you write the theory as well. So you must have written in the notes. You need to prepare that. Then procedure of share brokers registration. The notes that I provided has this question in it. Then comes purposes and disadvantages of amalgamation that you can find it in the book. In case you don't get this answer, just let me know. Then comes purchase consideration. So all in all, the theory is not that difficult. If you're prepared a little bit on it, you can easily write on it. For, as I said, for 4 marks you need to at least write 2 sides. That will ensure you get good marks in theory. Okay, so with this we end this paper of March April 2019. Please stay connected.